take over the show. Guys, thank you very much for having me. As always, I'll be back on next week. So stay safe. Have a good weekend. I'll see you all later. Thank you once again.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Thursday. Just taking a look here at the U.S. 10-year yield. Nice little drop from yesterday. I don't think this necessarily is a big old trend changer, but we're going to find out. The correlation that we've seen, this has been really interesting. So the dollar basically bottomed out around the same time as the U.S. 10-year. So let's go ahead and pinpoint this. Let's have some fun. We have the dollar, or this is the U.S. 10-year. We bottomed out on September 17th, the day before the FOMC. Let's see when the dollar bottomed out. The dollar bottomed out. There is your September 17th, 18th noise. The dollar bottomed out about a week later. And it's not really a huge surprise that the dollar has been getting stronger as the 10-year has been rallying. So I think if you are wondering if the dollar is going to get stronger, well, then the 10-year is going to get stronger as well. It would be nice and lovely to see that the 10-year is going to drop, and that probably is a near-term correction in the dollar, which is great. But the news that came out yesterday, we had CPI yesterday, we had PPI. Market clearly got all excited. Okay, but looking at this chart, I think I talked about this yesterday. Pretty clean technical analysis here. You know, the market is making and has been since we topped out here. We have had 1, 2, 3, potentially 4 lower highs. 1, 2, 3 lower lows, right? So is it possible? I mean, we have one more day of trading this week. We have MLK Day and inauguration on Monday. Markets are closed. So what does it look like? I would be a little cautious of, and I said this yesterday, I'd be cautious of like a bull trap at this high. If we, and I wouldn't jump in and short it necessarily, but if we break this structure, that we put in another resistance area and the market comes back and fills the gap and possibly has some momentum to revisit some lows. And, you know, and Nasdaq wise, we could still fill the election gap. We can come down and revisit, you know, there's other gaps back here on the S&P. So I'm just not super convinced that this is the bottom. You know, that's the bottom and we're going to all-time highs again. I'm not convinced. If we do get to all-time highs, I'm still very cautious and skeptical of the follow-through. So I would say this. If we have a bull trap scenario, we can look for a, you know, and again, it's going to be option trading for me, looking at like a bear call spread or bear put spread for something risk defined. I did put in a hedge this week with my traders and some of my services that were, you know, we're running some credit spreads and debit spreads. I put in a hedge trade. I did a 590. I think I did a 590 by 570. Let me double check that. SPY right here. Yep, 590 by 570. Put it in for $5. It has a potential to pay out $20. And I just need to see if price will make its way back into some lows. So if SPY is going to head back down to the lows, that was a 575 level. If we hit 570, like I'll protect a majority of the profit. So I still have the measured move for the head and shoulders. If we have, lower high, lower high, lower high, lower high, I'm a little cautious of like the 600 handle. If price came up to the 600 handle, I would just look to see if it fails. So if we have a bull trap, that's about the area we'd have a bull trap, right? I know Trump favors a weaker dollar. The question is can he get it? He can say he wants a weaker dollar. He can bully the Fed on Twitter if he wants to. Doesn't mean it's going to happen. I mean, the 10-year it's being traded by bond traders, and it's basically calling the Fed's bluff on a misstep in monetary policy. So Trump can say whatever he wants. Doesn't mean it's going to happen. He can say we're going to have Bitcoin as a national reserve currency. Doesn't mean it's going to happen. He can say that, again, it's very different. Government's pretty big, whether you like it or not. So, saying one thing and getting people to think that, oh, this is what's going to happen under Trump. I mean, it's probably so difficult to get anything done in the US government, which is why the market for decades has loved gridlock over anything else, because it means nothing gets done. And that way the markets can continue to do what they need to do. But I'd say at this day and age, this stage, it's like we've had higher inflation for longer. It's certainly been felt the last 4 or 5 years. We've been operating around 4% inflation every single year. We've at least been outpacing inflation. So I have an interesting stat here. Let's see if I can go Twitter. And my boy Charlie Bolello. I'm just looking for one particular chart. Let's see here. Egg prices going up again. You got Mag 7 with the percent of index at 33.5%. That's crazy concentrated. Here's your CPI increase over the last 4 years, which is everything is more expensive. CPI, let's see what the number is. CPI auto insurance up 60%. Freaking nuts, man. This is the chart I'm talking about. Consumer price index, the actual CPI from 2020 to now has been about 4.2% annualized, while the Fed is telling us 2%, 2%, 2%. We're way above that, right? Over the course of the last 4 years, we're 11% higher than the 2% trend. And what's even crazier is the fact that, over the last decade, we have had 285 percentage points in inflation. Like, I mean, if you're not getting a 3 to 5% raise every year, you're falling behind. On top of that, your purchasing power, debasing of the currency, like it's ridiculous. On top of that, when you get higher inflation, it's a crazy uphill battle, you know. So it sucks, and this is what's been being felt, and this is why people are annoyed and frustrated, and willing to go completely off, off script and say we don't want a typical traditional career politician as president. We want some reality TV star. So anyway, it is what it is. We'll see what happens. It's 4 years, whether you like it or not, and we're about to see what the market's made of. So anyway, where we are at is currently making lower highs, lower lows. I think all-time highs are difficult to get to. I will say this: if we hit these highs and we fade from there, it wouldn't surprise me. If we somehow stretch on any type of renewed optimism to all-time highs, I don't think there's much momentum behind that. That's just my personal opinion. I'm not going to do anything foolish and just go all in bearish, but I would say I'm going to take some stabs at the market, probably put on some hedges. My hedges right now are going to be out to March. I'm giving myself a pretty big window that if we're going to see the markets decline over the next maybe month or two, then that would make some sense to me. Also, let me see here. I've got an issue. Let me see if I can go. Fudge. See if I can go. I've got a chart. I just had it yesterday in a roundtable that I did. Let me see if I can find it. Crap. That's all right. It was, I shared it last week. I don't know if I have the screenshot of it. Let me look. No, and I don't think my library for my snapshots are whatever. Anyway, it was seasonality. Seasonality for election years, with the previous party losing, new party coming in, all election years. Basically, Q1 of a new administration is a dip. Q1 is a dip, and there's typically an August, September dip, and then October to December is the rest of the year. So if you think about the seasonality this year, let's say we go from January to December. So I'll just quickly draw this out, and then we'll do some analysis. So January here, December here. You have basically a dip through March, and then a rally into May, and then it's pretty choppy, a dip into August, September, and then October to December. That's what, for 70 plus years, that's what election years have looked like. Now you put, that's the average or aggregate. You put in a losing party and a new party coming in, then it's a little bit different where, it starts out where the dip is maybe a little bit more pronounced and it still has the same type of tendency. So it's very close to a Q1 would have a pause or a pullback, and then we have like a pre-summer push, so like April, May going into the summer months, and then an August, September dip or pullback, and then finishing strong in Q4. I think a big factor for this year, like happening right now and lining up for earnings season, is going to be what earnings look like over the next couple of weeks. Like overall consensus wise, companies that are reporting earnings, who's reporting earnings, who's beating estimates. And I think this is going to be really, really key to see that, okay, of the S&P 500, maybe 60% of stocks beat estimates, maybe 65% of stocks beat estimates, maybe, I don't know how high it has to be, but to justify, us being at like, what, 3% off the all-time highs? What's the S&P away from all-time highs? From all-time highs to current price, we are about 2.5% away. On the Qs, from all-time highs, where are we at from the all-time highs? The Qs are down about 4% from all-time highs. That's not that far away. So I mean, to consider that, hey, the S&P just had like a 5 to 6% correction. Hey, the Nasdaq had about a 6 to 7% correction. That's nothing. Like that's a like minuscule peanuts correction compared to what a bear market or a healthy correction or a deep correction could look like. But again, Qs you see here, lower highs, lower lows. SPY here, lower highs, lower lows. Okay, the Dow looks a little bit different because the Dow had such a nasty flush earlier. I do wonder if the Dow is trying to set up something like this. If we have any type of bullish pattern in here, is there a gap fill and is there an accumulation that gets us back up to these highs? If this, I mean, it's a little messy here, but if this is a reversal pattern, okay, if this is a reversal pattern, then I'm looking to see if the DIA will settle back into around 428 to 424. This isn't necessarily where I want to establish positions, although that would be a pretty good entry. I want to establish positions if we get above this neckline here, then I would say this has a recovery in its future. But the question would be, if we come up and just hit this level, is this a swing? This is a flat pattern, and this market has lower to go. That wouldn't surprise me. So like the bulls would have to break this and prove they want to go higher. The bears could potentially slip into getting the upper hand again and just drive prices a little bit lower, through the election gaps and, take out some structure. I think a lot of these indexes, if we get like a 9 to 12% correction, I'm way more interested in establishing positions as a bull. Way more interested. Being 2, 3, 4, 5% off the all-time highs, I'm not that interested in getting crazy, crazy bullish. That makes sense? All right. So just thoughts on the day. Okay. So 10-year we did. Let's talk VIX. VIX is down hard from yesterday. We're at 1602. Still, something to respect. I mean, 15 to 17 is around historical averages. Greater than 20 is a pretty good spot to be selling some premium. In the low teens, 12 or 13 or 14, that's really low volatility. You're better off, buying and being like you're better off being long options or being long volatility if you're getting down to those crazy low levels. But we'll see. It's been, somewhat elevated since we had our second largest volatility event from our first largest volatility event all in 2024. That is one takeaway. right? That's one takeaway from 2024 is a fairly simple bull market with a couple of hiccups along the way, but two outlier volatility events happened during December 18th and happened during August 5th. I will probably never forget those dates just because it was a crazy, crazy event. Anything in SVXY? No. DXY? I think a pullback is fine. A pullback is fine. You know, there's a pocket right here on DXY. I've said this before. If we get a pullback on the dollar, okay, let's say the dollar pulls back here, takes out a low, maybe a little topping pattern. I would just wait for a trend line break. If you want to establish repositioning on the dollar for longs, I think the dollar has the ability to get to 114. Okay. The crazy scary move would be like if the dollar just blows through those 2-year highs, 3-year highs, and gets to 120. That would be like that's the pain trade. That's like insanely dangerous. If the dollar blows through 114 or 115 and rips up to 120, how does it do that? If we have a 10-year yield, if the US 10-year is, let's say, 5.25 to 5.5%, if, okay, this is a big if, but if this is the case, we are probably blowing through these tops on the dollar. So just saying. If the 10-year is going to drop a little bit in the short term, then perhaps the dollar has a bit of a pullback. But I still think after this high taken out, this dollar is pretty well supported for more strength. Right? So anyway, point is, I'm not calling the top on the dollar now. I would be looking for dollar positioning. If we get a pullback, I'd like to consider dollar longs with some defined risk. If we come up to these highs, I don't want to call the dollar top here either without confirmation. Right? So just one big story. Watch the dollar 10-year yield. How does that play into the growth play, or how does that play into the growth of the equities market? Can we sustain these high valuations? All this is on the table for this year. Oil prices. That's a big smash down in oil. I'm not super surprised how volatile oil is right now. Energy sector declined pre-market Thursday. I did put in some fresh trades on XLE and the Pulver alerts. That's looking totally fine. I put this in, posted this trade 83, 82, 81. I just did some cash secured puts. I'm willing to own some XLE simply because it's a nice diversifier. I was in this roundtable yesterday with 7 others that I work pretty closely with, and a lot of the talk was energy. I'm not saying it's crowded when you have professional traders that are getting into energy, but I don't necessarily love the volatility of a stock pick in energy. Right? Like there's a lot more volatility in stock picking energy plays because they can be all over the place. I mean, when we had like COVID, for example, I was trading Halliburton, Schlumberger, BPA. I'm trading, Exxon Mobil and Chevron and ConocoPhillips. I mean, those are kind of household names, but like some of them are pretty volatile, and when it's like, this nuclear company and this blah, 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 like I don't, I get that it's exciting to have like a stock that could be up 50%, but literally can be down 50% too. So XLE is way less volatile. And if we have any outperformance in the energy sector, it will be reflected in XLE. And so even if this is just going to go up and hit a channel high, that's about a 7% gain from current price. Okay, so if we get up to around, actually take my numbers are way off here. I was going to the highs. It's about a 6% gain to get back to the highs. If we hit channel highs, we're looking at about a 10 to 12% gain. Not bad. Now, I'm going out to March here for the puts. I will probably continue to add some of these puts. If these are looking good for profit, if I've got about 85 to 90% of the $1.41 credit per contract, I'll just take the 10-cent debit and get rid of it, and then reestablish the position for like a 60-day option trade. Right. So either this is a upwards channel that I have drawn here, or this is potentially a sideways channel that I can still use the same levels of support. But if we go higher in energy, then we're talking AI infrastructure, we're talking utilities, perhaps we're talking nuclear, we're talking all sorts of different, energy plays. I'm okay with that. It's a way to have exposure. It's also, I don't know if it's lower. I think it should be lower beta. Yeah, lower beta, and it's also like one of the more non-correlated assets to trade against the S&P. So, for the most part, energy sector, especially after that big flush down in late December, it's one of the more beat up sectors, and it was a good opportunity to buy. I would have, wish I did, added in some puts that would have been even lower at a much better premium simply because the IV would have been higher. But I got in, yesterday. It's no big deal. These trades are fine. 83, 82, 81 is right now way out of the way, which I'm happy with. If I take some ownership, I'm willing to own. This would be it'd be 300 shares what I'm willing to own with a break even of 82, and then I divide the 141 by 3. So it should be $1.41. Where's my calculator? $1.41 divided by 3. So $82 minus 47 cents. Oops. So I'd own the shares at 81.53. Okay. So if I own shares at 81.53 and I get back to the recent highs, that's still a 20% gain. We get back to all-time, or these all-time highs here, that's a 25% gain. I would take that on the non correlated asset. Okay, especially on a sector. I mean, I can't expect the sector to be like a tech sector that's going to be like 30, 40, 50% a year. An energy sector up 15 to 20% for the year is pretty good. Okay. Let's take a look. I'm seeing some people comment about rate cuts right now. We'll see. I didn't see anything major. It looks like the market got all excited yesterday, like, oh, on a more dovish Fed. It's like, what are they talking about? These probabilities have not shifted. This is still looking at 1, 1, 1, 1 cut only. I don't see where everyone's pricing in 2 to 3 cuts. I also don't see how this reflects that the Fed's going to hike rates. It's like there's nothing on here that shows hiking rates. There's nothing on here that shows more than one rate cut this year. So if we were going to hike rates, then we'd have to have a new table right there to show 4.5 to 4.75. I don't see that. It is nowhere on the calendar for the Fed Watch tool for the next, 10 months, 12 months. We're going out to December 2025. The only thing I see here is a probable cut coming in June of this year. That's it. I don't see anything higher than that. The only other cut might be in here where you can see some of the percentages. Okay, 38% for pause. The only one that'd be close would be maybe November, or I guess it'd be October or December, because we're at 35% pause, 32% pause versus a 30%, 31% cut. So possibly, but you can see here, like, it's not the highest probability. So right now the market's like safely and highest probability is one cut coming sometime this summer, and that's about it. And if we're going to see a shift in that, depending on where inflation's at, where the Fed is at, by October or December, that is another potential cut later in the year. Okay. All right. Just food for thought. That's XLE. There's some sector plays there. Let's go back to, we did dollar index. Let's go gold, silver. We did oil, right? So I don't really know what to make of oil. I would say risk-defined trades. If you like oil long, okay, fine. That's a pretty nasty candle. There's a gap fill right there. We can come back and find some support around 74. I don't know. I don't believe that energy is just, oh my gosh, we're losing control of it. So I wouldn't be surprised if oil smashes right back down. The ceasefire that's going on in the Middle East right now could probably also contribute to lower oil prices because it's more stability in the Middle East. So I'm going to stay out of oil. I'm in natural gas right now, which is a 2-year play. There's my NG trade. If we get to higher highs, that's great. There's my UNG position. I've got a diagonal spread out to 2027, and I'm selling against it every 60 to 90 days to lower the cost of my debit. But I'm going to be long natural gas. Gold. Gold's looking pretty good. I don't know if gold is getting back to all-time highs. And again, if it does, I don't think this is going to be a breakout trade. If gold gets back to these recent all-time highs, I think gold is going to be a range trade. Just my opinion. But I like where gold is at. Do I want to do anything with it right now? No, I don't. But what I hope is happening is that gold is up and silver is up. And silver to me is a better technical trade, so I can make some more money on silver. If gold goes higher and breaks higher, great. I'm still targeting 3,000 or higher. Okay. Oops. Get rid of that. If we get to 3,000, I mean, from current price, if we get to 3,000, that's still, 10% on gold for the year. That's not bad. I'd like this. If we had a range opportunity, let's say we get to these highs and we fall back to range lows. Well, if I still get a price target at 3,000 on positioning that I want to get in, that would offer from a 10% gain to now 18% gain. That's a big difference. which is also why I'm very patient on my entries for gold. So if we hit the same resistance levels here, just be careful on this current structure. If this thing breaks and sells off, then we can come back and revisit the same lows again, right? We can come back and still find the 200 moving average, which is what I'm waiting for. If we hit the same highs, just watch the range trade. Watch the range trade. That's all. But 3,000 is going to be my profit target. If we get there this year, I'll probably take some profit on gold. I have shares of GLD. I'm not doing a lot with gold futures right now because I don't get the contract timelines that I want. So I'm also going to wait for a better pullback. Silver, looking okay. We're probably going to see gold versus silver going upwards. I guess it's just hanging out at these highs. We'll see. I'd like to see this head lower for silver to start outperforming. So if silver, and let me set a chart alarm here at 32.25. 32.25. And that to me is, okay, so we had a bit of an interim top, potentially a bullish trade here, a little bit of pullback and accumulation. I like that trade into 35.88. So we'll just say $35.75 to $36 price target. That is my target one. And then beyond that is another measured move for a fifth wave symmetry that is out to $48. So I would say for the next 1 or 2 years, I'm bullish on silver. I've been bullish on silver since we had this head and shoulders pattern down here. So we had this big rip during COVID. We had a really nice build up head and shoulders trade. I was accumulating and then getting that nice little surge for profit. I did take some good chunks of profit last year on silver. I'm still looking for more upside. That's my measured move. That is my symmetry target. Okay. So I like silver. Bitcoin. Bitcoin is 98. Are we in a corrective channel on Bitcoin? Could be. You see it responding so far. We have a high, we have a high, we have a high. These are lower highs. Are we going to head down and make a lower low? Is it crazy to think right now that Bitcoin, if we do something like this and the S&P does the exact same thing, is it weird to think that Bitcoin is now starting to get more and more correlated to the S&P? I mean, obviously there's a lot more volatility in Bitcoin than there is in the S&P. But man, holy, like, wouldn't that be nuts? If the patterns that you're seeing in the S&P and the Nasdaq are looking at exactly like Bitcoin, that would be wild. So anyway, I still like Bitcoin accumulating at lower prices. Watch the levels. I think Bitcoin has potential to make all-time highs again this year. If that's the case, I'd like to see if the S&P and the Nasdaq can also make all-time highs. Okay. Pretty correlated with money flows, yes, but I mean, as far as gains, I mean, it's not even close. I mean, Bitcoin is way more volatile, right? You have a 50% pullback, 40% pullback, 60% pullback, and the ebbs and flows. I mean, if you're going to give the S&P like 3 to 4 times the volatility, then sure, it's correlated. But I just think it's interesting that there's more exposure now to Bitcoin by owning the index. SPY or QQQ has Bitcoin exposure. Okay, QQQ with MicroStrategy has Bitcoin exposure. The ability to trade IBIT has Bitcoin exposure. So anyway, point is something to watch. I'm still looking to see if we have a correction back into the 90 to 80K zone. That's what I'm looking at dollar cost average. I did take a profit on IBIT this week. I just had a credit spread. It was a 52 by 51. I closed it out for a 1 cent debit. So I took like 99% of the profit out of that today, which was nice. FPTC still doing the same thing. Bitcoin, MicroStrategy. I did a roll yesterday on MicroStrategy. I need to do, this needs to be updated. Hang on 1 second. I updated this yesterday in session. So MicroStrategy, 279. So I got a 321 expiration. All right. So my new break even, it's a 321 collar trade. And I rolled it up to a 310 and down to a 240. And my break even is 279.86. So my trade on MicroStrategy right now, if it gets called away by March, and I realize, like, when I'm playing around with collar trades and covered calls and buy puts, it's like I'm capping my upside. I'm still offering some downside protection. I'm choosing to do that. if I want to just go for the big home run trade and hope that MicroStrategy revisits $500 again, I'd love to have nothing in the way of that. But for defined risk and protection of the downside, I've lowered my cost basis by what is this? 60, almost $70 in the last month. Power of options, I like. If I get it called away, 279.86 minus the 310, I now get it called away for a $3,000 profit. So I own 3,000. This is on 3 of my accounts. I get 9 grand over the next, let's say, 60 days. Okay, really quickly, I want to check something on expirations here. I want to look at some earnings as well. Most of it's financials this week. Going into next week, I'm curious where some of the earnings stack up. We can look at stock twits as well. I'll come back to that in just a second here. I want to see what the expirations look like out into April. Right now, April. Okay, so it's funny. I'm planning on closing on a house in mid-April, and April 17th is 90 days out. So I think that's good because within 90 days, I can look at discussing like rate locks or just at least get the discussion going with some servicers. So all right, good to know. Okay, that was a to-do list on my my agenda today. So this MicroStrategy, Coinbase. Coinbase still hanging in there pretty nicely. I have a 111 trade down here, looking good for credit into February. I can't believe I took that trade with only $1 credit. That seems like a little light, but I know the expiration is not out super far. Let me see what Coinbase looks like we're at a 29.3 IV rank. We have earnings on February 20th. I have the 21st. Like, how do I not get more premium out of that? Let's see. Let me look at, I might do another one. Coinbase. So there's my 111 for the 21st. I was wondering if I go out another cycle. So let's go out like March 21st and see if the premium, the premiums are just like not awesome. But I like the level, kind of the same thing. Like this one kind of 50 zone is okay. So if I took some ownership, I would consider ownership here. Coinbase would have to fall hard. We'd have to fall like 45% from current price. We would have to fall 55 or 56% from the recent highs. I don't think this is at all-time highs yet. Nope. Coinbase was higher, and I'm wondering if we are in a trend higher. Perhaps there's like deeper pullbacks and it still makes higher lows, but if this is a resistance becoming support, and this is an accumulation stage, like we could still see higher highs in Coinbase. So if I just did income trades here, one in February, one in March, I want to price one out right now and see what it looks like. Okay, I did the Nasdaq. I did it yesterday. I did it today. Here's Qs. This is what I see. Lower high, lower high, lower high, lower low, lower low, lower low. That's what I see. I think this is a bear trap or a bull trap scenario. I could see the CPI gap getting filled by next week. I'm not sure if the market is going to, prove that it's going to be bullish. We've got to get up here into open space, and we have to stay. I would say the Qs have to get above probably 525, okay, and then stay above 516. That would be, I would justify doing this. If we had a reversal pattern where we had this low, this high, this low, let's say we get to this high, and then we pull back here and accumulate, I would look for that level to break, and then we can hit all-time highs. So for me to be bullish, we got to spend some time on the right-hand side of this trend line and break this channel. If we don't do that, then this is resistance, and we're coming back down to fill the CPI gap and possibly making fresh lows. The election gap has not been filled on the Nasdaq yet. Okay, so let me go back to Coinbase here. I'm going to look at a trade. Let's see here. So premium wise, like the 160, I can probably do like a 111 here. If I do, it's almost, I only want to have 100 shares. So that's why I'm like, I could just sell a put. But I have a little bit more protection here if I took on any ownership, which I don't mind doing. So if I took the assignment at 150, -5, -124, I'd own shares at 143. That's the same thing I kind of did before, is either 111 or ratio spread. Let me see which one I can do for better ownership and better credit up front. So if I move this up a strike, 165 by 160 by 155. I would take ownership 155 minus 5 minus 155. I'd own shares at 148.45. 148.45 is right back down to the September low. I'm okay with that. I'm okay with that. So I'm going to take this trade. It's an income trade first. There's about a 95% chance of profit. Doesn't tie up a lot of capital. If I get a 148, well, I'll just say $155. So $155 on one contract over the 1206 buy power. That's a 12.8% return on buying power. If I did have the assignment, I would try to flip this for at least $1,000, which means I need to get at least $10 a share. I'd try to hold it for maybe $20 a share, like I'm doing a micro strategy, maybe making $3,000 per account. The premiums are good enough in this to do it. So do I like the trade? Yeah, I'm going to take this trade. This is a 165 buy put, 160 sell put, 155 sell put. Now, if it's better to do a break even would be around 148. Is it better to do this trade? If I delete this and I buy the 160, sell the 155 by 2, $1.50, I own the shares. It's about the same break even. I'm going to give myself a little bit more freedom and buy, sell, sell. So I'll do this trade right here. I'm going to buy the 165, sell the 160, sell the 155. If I do take on any assignment, that would be around 148. So 155 minus 5 and minus the $1.50. So about 148.50 be my break even. Hopefully I get filled here. I don't want to take less than 140, but I'm going to try to get filled at 150. So let's see what it looks like. Okay, 150 is not filling. I'll just go a little bit below the mid. I might have to go down to like 145, but I'll try to penny it down and see what my best possible fill can be here. And then I will look at that as a Pulver alert. 146. Come on, coin. 145, 144. All right, I said I'm not taking less than 140, so if I work it down there and it doesn't fill, I'm going to cancel the trade. And final offer, 140. What is it? Doesn't fill. You got to be kidding me, man. Well, that's annoying. Mid price at 149. I'm asking for 140 and the broker's not filling me. So cancel that. Could I do anything different? Let's try another expiration. Let's go to April. Similar levels. 165, 160, 155. Same trade, same ownership, a little bit more credit, maybe. I mean, the open interest is a little bit light, so maybe that's where I'm not getting the fill. But this has a better bid mid ask. This should be better. I think this will be fine. I'm going to take this trade for April. So I'm going to buy the 165, sell the 160, sell the 155, try to get over $2 of credit here. Let's try that same trade for different expiration. So April, freaking no problem. That was weird. So I went out to April 17th and got filled on the trade. So now let's get this in for a couple of accounts here. 225 in the mid's 227, 224. Come on. 225 fill, no problem. Good. That's good. That's way better. 225 and 225. All right, so those are all filled. Good, 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 good. So I'm going to get this added in. This is coin. It is a 4/17 expiration. Buy the 165 put, sell the 160 put, sell the 155 put, collect the $2.25 credit. If I look at the mechanics of the trade, 94% chance of profit. And I'm looking at assignment risk of around 5%. So I'm willing to own, and the break-even price on that would be 155 assignment minus the $5 on the debit spread and the 224, 225 on the fill. So 147.75 would be my break-even. Is 147.75. Okay, so that trade can go into the Discord. So I'm gonna put this in under my stocks options trades. So new trade. $417 expiration. 165 by 160 by 155, 225 credit, 94% chance of profit, 5% chance of assignment, willing to own shares. If assigned with price less than 155 by expiration, break even price if I own it's 147.75. Okay, now I will get a screenshot posted. Add this trade in right here. So that's an April 17th. So buy the 165, sell the 160, sell the 155, 2.25 credit. So it's essentially the same trade, a little bit more premium, obviously, and it's an income trade first with the cash needed, if needed, to own the shares and repair it for $5 or $10 a share, hopefully more. But that to me is pretty safe to just take a trade, tie up some capital, make a couple $1,000, and then move on. All right. So I don't mind that trade, and ownership wise, like that's a pretty good level. And obviously if Coinbase goes higher, like if Coinbase goes higher, then I can't keep taking trades down here. I'll have to like start moving this, below this trend line. So I could do more income trades like this if we're starting to see Coinbase going higher. Okay, so that is posted. Let me get a screenshot here. Oops, that's not a very good clean screenshot. There we go. Okay. All right, screenshot is in. Okay, that's posted in the Pulver alert section. All righty. Ethereum looking good. Copper has been on a tear lately. I looked at a copper futures trade. I don't know. I looked at this earlier the week. I thought I was trying to do like a 1-1-1 with a hedge. It didn't really pay a lot, so I didn't get the trade. Japanese yen futures. Did anybody see this yesterday? By the way, currency strength futures. Look at this crap. This was yesterday. Japanese yen during the CPI. I mean, this is like all night. This is 11 p.m. Eastern time, going into the entire trading session from like the London overlap to the U.S. session. I mean, that's a strong Japanese yen yesterday, and today it is the same thing. So, is anybody seeing anything fundamentally on the Japanese yen? I have been wanting to get long Japanese yen futures. The problem was I didn't have the timeline that I was liking. So, looking at 6J here for Japanese yen futures. So 6J there. I can only go out to September, and that's just not long enough. This is how I would prefer to trade instead of trading currencies. I'd rather trade futures, and I just don't want to I don't want to go to September. I want to go to December. I want to go to January 2026. I'm hoping that these futures contracts will give me additional expirations. I don't know how long I have to wait for that. But point is, like, it's starting to show some signs of gains. I don't know if there is a discussion around the Bank of Japan starting to raise rates again. That might be why this is starting to get a little bit stronger and maybe pricing something like that in. Approaching intervention level. Nobody knows where the intervention level is. I mean, that's not why. Because if you say that, it's like we had intervention here, we had intervention here. It actually broke the highs. So don't tell me that's intervention level. It's not intervention. Okay, if we had intervention levels, it would be the pain trade that goes up to higher highs, and then there's intervention. So I think if there's anything going on right now, it's that the BOJ might be talking about going up another, 10 to 25 basis points, which would be the opposite of every other central bank, which is they're the only central bank that is raising rates. and it's going to potentially force the hands of the deleveraging, right? So if there's a swing trade opportunity here, dollar yen, if it sells off into this low, and then we have a swing trade, like this is a swing, this will be a pattern. I mean, if you've got a high, low, lower high, lower low, right? Like that pattern, I would be willing to put a trade on. Otherwise, this could be the same garbage that it's always given us, which is just this and this and this and this, and it's right back to the highs again. Then there's more of a trade that I would look to take. So on the Japanese yen futures, I'm going to just, I don't know, just wait. I'd love to see this. Yeah, this was like a falling wedge scenario. I'd love to see this starting to do something similar where it comes up here, finds dynamic resistance, and then just works its way into this zone. Then we can get the trade where it's like, that's where I look to get long the Japanese yen. And if that trade doesn't happen, I won't take the trade. Like there's something I specifically want to see, and I want to see the right, futures trades and the right contracts. If I don't see that, I'm just going to pass in the trade. Yeah. So William says there, Bank of Japan discussed rate hike yesterday. Okay, that's fair. All right. Nikkei is flat, still garbage, still stuck between that giant July and August drop last year. Japanese yen, I'm still long FXY. I still have some shares of FXY. EWJ. DAX, Germany up to fresh highs. FTSE making a nice little rip. Argentina, I'd like to see a pullback. China, nothing too exciting there. EWZ is Brazil. Apple, down again. Amazon. I took a small loss in Amazon. What's trading for right now? I took like a 20-cent loss in this trade. Amazon. You mother effer. It would have been like a 10 to 15 cent win. I took a small loss this morning. Whatever. That's just annoying. Anyway, Amazon's good. I was looking at a liquidity level today at 225, and I'm gonna see if it gets hit by tomorrow. Just one of my like order flow softwares that I have, and 225 was the level. So look, it came back in a big way. I was down essentially $1.20 on the trade. I closed out for a 10-cent loss. Like no big deal. So this coming back up to my level, it's back to break even or better, which has been a pretty nice turnaround considering this trade started out, way down at 216. We've gone up, $9, $8 on Amazon. Google, got a bunch of trades out to 2025 on Google right now. Meta, I'm waiting to see if we can pull back or at least go choppy until this 200 moving average catches up. Microsoft, a lot of trades down here, willing to own it. Just play the income game for right now. This one might, I don't know, it might be a good trade just to throw some dollars at it, which that's not really, a trade, but dollar cost average wise, like that's not a bad spot. If we get back to highs, there's some gain there. I mean, if we get back to highs, that's a 10% gain. Not that excited. So I don't know. I'll do the income trades. Right now, I was looking at this, like if I put let's say I put $10,000 at it right now, and it goes up 9%. Well, I make $900. Okay. And I have to tie up 10 grand. Well, if I did this, I make $1.50, $1.60, $2.40. What is that? That's it's over $5.50 a credit, which is, not $900, but I also don't have to rely on the price going up, and there is income to be made, and I can just keep doing this and possibly make the same amount of money. So way less capital tied up, way more cost effective trading options, and I'll just continue to do that on Microsoft. All right, Netflix. Come on, Netflix. I want to see a deeper pullback. NVIDIA, 136. I've got the collar trade 140 by 130. Tesla. I did throw in a small trade on Tesla yesterday. I bought it at like 427. I just did $1,000. And I'm going to do the same thing here at 362, the same thing down here at 285. Maybe they get filled, maybe they don't. But I at least want to have something where if Tesla just starts to go ballistic, I want to have something at least making me some money. I mean, is Tesla going to be $1,000 stock this year? I don't think so, but could it be $600 or $700? Could I generate some income trades here? Yes, yes, yes. Okay. Berkshire Hathaway, nice little response here. This trade's probably looking pretty darn good for some profit. We had a really big bounce off that 440 level. Let me check on this one right now. I got him for 225 credit on Berkshire. Let me have a look at this stock here. So Berkshire is there. Currently up around $100, and max profit is 225. Okay, bonds looking better on the 1 to 3 year, looking better on the 7 to 10 year. So far, looking better on the 20 plus year. Like we said yesterday, the yields, 10-year yield actually having some follow through to the downside. Oh my gosh, oh my gosh. Cool. I would absolutely cheer this thing on if we're dropping back into like 4.4, 4.3. I would freaking love it. But does the 10-year yield dropping translate into a lower 10-year or a lower mortgage rate? That is the I don't know. We'll say that's the $400,000 question, because that's about the average home price right now in the U.S. Even though that seems like no houses, like what house can you buy for $400,000? A 1-bedroom townhouse right now. And look, I mean, the fact that we have 30-year fixed mortgages, it's better than Canada. I know Canadian real estate is a whole another conversation. If anybody's in Canada, I hope that you're like refinancing slash, principal payments. Like, just, it sounds atrocious what could happen here the next 1 or 2 years. But either way, I'm watching that 10-year closely. We talked about some of the futures trades yesterday, Australian dollar futures, euro futures, pound futures. It's really a correlation of the dollar. Corn, soybean, wheat, and cocoa. These are diversified. This one's going pretty nice. This is a diversified commodity-based ETF. I mean, they both look okay. I think FTGC is better. You can obviously see that the price action's been a little bit more resilient. I'm gonna hope that we come back to like 22.50 before I would consider getting long. It shows that there's some encouraging price action here. I suppose if there is a breakout, this is like not the trade that I want to chase. But if we came back down to these lows again, I would watch for that to be support and just buy support. If I buy low enough and this thing is basing, if I get a pullback and I can buy at like 22.50 and we get all the way back up to $30, like that's a pretty good return on risk, right? If I get a chance to buy it there, that's a 37 to 38% chance, or 38 to 30% profit. Junk bonds tightening back up, so credit spreads, liquidity still pretty good in the markets. Chinese stocks, nothing impressive. Probably still wait and see. Probably still we've got to get some more news out of China by anytime. Like, they need to have like another bigger stimulus plan moving forward. I don't think it's necessarily going to solve the bigger issues. They're currently like ventilating the property markets. It's awful. Like, what's the domestic market in China has been just gutted. Like, nobody trusts the property market, nobody trusts the stock market, and if that's not happening domestically, it's hard to get foreign money into that too. So they're trying to fan the flames and trying to get some additional stimulus by talking it. Obviously, they put in, $270 billion like in December or September. That's where we had this big run up here. The market got excited, but it clearly didn't follow through. So there's got to be some more, active discussions and active stimulus coming into China. I think technically the stocks themselves look pretty darn good. Issue is there's no follow through right now. So, I mean, I have some exposure. I've got Alibaba, Baidu, and JD. That's it. JD, I think I'm covered to 39 with collar trade. SCHD, SCHG, looking fine. I bought both of those late last year. Advanced decline, stocks above the 50-day. Okay, so we got a decent pop to the upside on stocks above the 50-day. It didn't come down low enough for me to kind of get the buy trigger that I wanted, so I wasn't just full-on index buyer. Costco, I'd like to see a flush lower. Walmart, I'm owning the shares. I'd like to see a flush lower to lower my cost basis. Nike, I've got a $65 and $60 put. Home Depot and Lowe's, we haven't had earnings on this, but came right down to that 200 moving average. That was okay. That's yesterday's CPI. Got it. So I was like, where's the gap from? CPI yesterday. Big gap on the upside. I'll wait. Lowe's, same thing. Big gap to the upside. I'll wait. MasterCard, Visa. I'm glad I got the heck out of those trades. So they had a nice little decline. I did some bear put spreads, made some profit on those. Johnson & Johnson, nice little pop to the upside as well. Progressive, nice little pop off the 200 moving average. CB, in the danger zone. This was one of the insurance companies that was getting hit hard on the fires and wildfires in LA, which right now is I'm reading reports that there could be like $250 billion worth of damage and claims. One of the most expensive natural disasters ever. So crazy stuff. But responded nicely. Did a little income trade here. That's just it. I'm going to do a little income trade, little ratio spread. I don't want the assignment, kind of, but if I get it, I'll take it. I'll manage it. But either way, those are looking pretty good for income. Palantir hit a nice little rip. I got a couple ratio spreads out here as well. Carvana not touching, but wow, like I cannot believe how volatile the stock is. And I suppose in a good way, like coming right down to that 144, 200 moving average window, and this thing is up, what, $55 in the last couple of weeks. Like that's insane. Anyway, Redfin, Zillow probably not touching. Sector wise, pretty good performance overall so far. Let's see how sectors are doing for the year to date. I know we're only a couple weeks into the trading year so far, but let's go year to date. So we got real estate down, tech down, consumer staples down, energy leading the way by far. Energy, the best performing sector by a mile right now. And I wonder if, I wonder what else is going to be good. S&P's up 1%, energy's up 8%. Okay. Is it going to stay that way for the whole year? Probably not, but something to watch. Like there's clearly some rotation happening. End of last year, towards the end of the year, Mag 7's not performing the same way. Energy is like the no-brainer. If you ever want to diversify away from the indexes, go into energy. But it is a very beat up sector and has been for a while. And, again, you wonder if the big story in energy is AI infrastructure, having more electricity to supply the grid. And if we have nuclear energy as well, it's like all these things could benefit. So if we do have like this big energy reform, I would hope energy sector benefits. And like I said, I don't really want to be a stock picker. Okay. Joe, I don't care about DJT. I think that if you want to trade it, good luck. I have no interest in DJT. I traded it during the election. I traded this little crazy swing up during the election or pre-election. That trade's done. So I could care less. I think there's, this is like a pump and dump stock. I've not seen this behave very, very well. It's not super liquid. It's not something I'm going to trade. If I did, it's going to be defined risk. Okay. So I think that'll do it for today. I told the team, so tomorrow I'm off. I'm heading back to the Midwest tonight, and I'll be back this weekend. But inauguration and Martin Luther King Day on Monday. I'm not sure if we're doing a session or not, but I'll be back around running my sessions on Monday as usual. So Chandler team, let me know if we're back on Monday. But I'm off tomorrow doing some travel. So I'll let you go. All right, thanks, everybody. Have a good rest of your day, and enjoy your Friday and weekend. I'll see you soon. All right, thanks, everybody. Bye.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow. Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.